everyone, it's Daniel here from Infovest. Hope you're all doing well. I want to quickly talk about the food inflation and food prices, and most importantly, food shortages. It is looking like more and more the probable chance of a food shortage and food inflation to exacerbate more than what we're seeing right now. It's looking like there's a high chance that this could continue on in the coming months. Now, I wrote some notes here and wanted to discuss some ideas, throw them out here on this video. You can comment below on your input. If you're a farmer listening to this, if you're in the farming industry, or if you have, experience with the food industry, or you have any other comments or, suggestions or ideas about the food market and the food inflation and the supply chain side of it as well, leave a comment below. I'd love to hear your thoughts. And even if you don't have a background in that area, again, just leave a comment below and let me know what you guys think. And if you can, leave a like on this video, follow this channel if you'd like to hear more about economics and macroeconomics and how it relates to the world and the stock market and the financial market out there. So let me start here. Wrote some couple of notes here, and I want to start with the idea of meat consumption. Right? So, meat consumption has basically increased over a decade. And it's become a lot popular now in emerging markets. Now, back then, a lot of meat in emerging markets wasn't really consumed a decade ago. And there wasn't much demand of it because of the income per capita, because of the wealth that was distributed in the world. If you looked at the West versus the East, the West was more well off compared to the East. And that's why you would see in North America, in the US, a lot of meat consumption would happen. Versus the East, they would more lean towards food like rice, bread, grains. That's where a lot of the consumption would be done in emerging markets. Now, as the years have gone by, as more trade has happened and progressed, right? We started to be more globalized in the world, in the U.S. Especially in the U.S. and a lot of countries around the world are now outsourcing work to India, China, Pakistan, etc., etc. And a lot of business started to be conducted around the world, and that helped with the income per capita, GDP per capita. And a lot of these countries started to see and are seeing today still, emerging markets seeing a lot of their GDP and growth continue to rise, right? So now, what does this have to do with meat? What does this have to do with food inflation, with prices, and most importantly, with grains, right? Grain prices have seen more of a demand and an increase over the decade, and especially now than, a decade ago. And this increase, even pre-COVID, has been happening. Grain demand has been increasing pre-COVID, before the Russia-Ukraine invasion, before the sanctions, before the war, before the supply chain disruptions. Grain demand was basically moving up much, much higher. So as grain started to get more and more in demand, right? And also the reason behind this demand is because of the emerging markets who consume a lot of grains. And when you look at the population, majority of the population out there are in these emerging markets. Majority, like if you look at, for example, China and India, there's 1 billion people plus in those countries, and they consume a lot of grains. And back then, the food consumption used to be rice, bread, wheat, etc., noodles, and whatnot, right? But now, with the income increasing and the GDP, income per capita and the GDP per capita, and the countries are now doing better and they're well off, now you're seeing grain demand increase because meat consumption is increasing. So as now people in the emerging markets are moving from rice and bread to now meat because they've got more money in their pocket, it's causing grain demand to move up. Now that's weird, right? You would think that, okay, meat, grains, they're moving from meat. You know, a lot of these countries are moving from grains to wheat to meat. Why is grain demand moving up if they're eating more meat? What does grains have to do with meat? And the thing is, to produce an animal and to grow it healthily and to feed it and to get it fat enough, you know, you've got to feed the animal grains as well. The animal's got to eat something so that you, the human, can eat, right? So if you think about it, billions of people living in India and China moving more towards a meat consumption now as they have more money, because now they don't want to just eat bread and rice. They want to include meat in their portion because they've got more money and they can do so. So if you've got more money and you could do so, you're going to choose meat. You're going to go towards meat. And for the farmer to produce and sell meat, they've got to feed their animals grains, and a lot of it. And animals eat and consume much more grains than we do. So as this demand increased, and as the demand for grains increased to feed the animals so that people could have meat, that's where grain demand started to increase. And that's why you're seeing over the decade pre-COVID, food inflation and food prices have been steadily rising. Now it's been exacerbated more because of the supply chain disruptions, because of the sanctions, because of the different countries that are producing wheat and grains, and it's costing you more because of shipping, and energy prices are moving up. And I'll talk a little bit more about this, but this has been exacerbated more because of this supply chain disruptions and because of the energy prices that have been shifting higher as well. Now, you'll be thinking, why would energy prices now, with crude oil and natural gas prices moving up, what does this have to do with food and food prices and inflation? Well, it does. This is another problem, a second problem. So the first problem we talked about, that consumption, right? Countries are getting richer, they're feeding more animals, grain prices are moving up, people are eating more meat, so okay, food prices are moving up. But second, to exacerbate the pain more, yes, this COVID policy, these COVID rules, COVID policy that's happening in China is creating supply disruptions, which are pushing prices higher because you've got labor shortages and you're hiring people and you're not getting people, and you got to increase the wages, which means your production is going to cost more because you're paying these employees more money because you simply can't find employees. And then again, you go into shutdown again, and then you've got to wait. And now demand for goods and services is needed because certain areas of the economy is shut globally in this globalized world, right? So second is the supply chain disruptions, the fact that we were living in an instant delivery kind of lifestyle, and we didn't have this problem of this COVID and this virus and this supply chain. This is what made trade so easy. And if you look in the past decade, China has been exporting to a lot of the Western countries and a lot of countries around the world disinflation, right? Because you're buying goods and services from China and you're outsourcing work to China and all these countries because it's cheaper. Now that you include the supply chain disruption, it's now not becoming cheaper anymore, it's becoming expensive, which feeds into a lot of these products and commodities, and that's why that also feeds into food prices. That's another reason for it to move up higher. Now, when you're shipping things, it also costs you fuel, and there's transportation cost in it as well. And if fuel prices are moving up, natural gas prices or crude oil prices are moving up, and gasoline prices are moving up, it's going to cost you more to ship. And then when you're selling it from one country to another, it's going to cost you more. Now, yes, United States of America, a lot of the West countries out there, Canada and whatnot, they are reliant on producing and farming food. U.S. is a big producer and an exporter of food. They can produce themselves. They can rely on themselves. And so they don't have to worry about someone exporting food to them and worried about higher food prices, higher costs. Well, actually, not higher food prices. I wouldn't say they don't have to worry about that, but they don't have to worry about eating, right? Like a lot of countries other countries out there who depend on food coming in from other countries in order to survive. But the U.S. doesn't. But why would the prices still move up higher, especially in the US and around the world, if you can produce yourself? And the answer, again, has to not do with only the transportation cost that's happening there because of higher fuel costs, but it is the answer of fuel costs and crude oil and gasoline itself that feeds into the food production, meaning the fertilizers that go into the crops and go into farming, that does eventually feed into food prices as well. So what do I mean, right? It sounds very confusing, so let me elaborate a little better here, okay? Wheat and corn are main feedstocks to produce ethanol, okay? So these biofuels. And now ethanol is now being put more, and there's mandates now that I think are moving up to a higher percentage of ethanol is being required to put into motor fuels and gasoline to fill in your car. Ethanol. Now again, ethanol is coming from these wheat and corn and these grains. So if you need more fuel and there's demand for more fuel, then there's going to be demand for grains, which means grain prices are going to move up, which means that if there's shortages of fuel because supply chain disruptions and whatnot, and Europe is in a very, very tough situation, and they're looking for these commodities like crude oil and natural gas and whatnot, and there's a demand for it and there's a shortage for it because of the supply chain and the war with Russia and Ukraine and the sanctions and whatnot. Because of that, you now require more grains, and if you require more grains, the prices of grains are going to move up, which means food inflation is going to move up too. So yes, there is a relation between the crude oil and the grains out there, because more energy cost, it's going to demand more grains, and grains are going to move up, which means that prices are going to move up. And remember, like I said in the first point, that if you eat meat and more countries are consuming meat, and to feed the animals you need grains, then hey, food prices are moving, energy prices are moving up, feeding into grains, which means that grain prices are moving up, which means to get you meat on your plate, it's going to cost you more. That's why when you go to groceries, to a grocery store, you go to a restaurant, it's going to cost more. Now, it's going to affect everyone globally, even in the US, if you produce your own, if you do your own farming and you don't rely on the outside, because of these energy prices moving up, because of the ethanol that you rely on. The third one that I want to talk about is natural gas. Natural gas prices, if you look at natural gas on the chart, on the futures chart, the ticker on TradingView, if you go to TradingView, it's NG. Look at natural gas futures. NG is the futures ticker you can pull up on tradingview.com. Natural gas prices have been also elevating, moving up, because again of the slowdown from Russia. Because remember, Europe depends on natural gas from Russia. They get 40% of it from Russia. You slow that down, which Russia has been doing in the summer months. And if Europe doesn't have enough natural gas for the winter and hasn't stored much because Russia's been slowing it down in the summer months, and you can't store it for winter, come winter, there's going to be an energy crisis for Europe, and you're going to see, actually, I don't want to use the word it's going to be, but there's a high probability of energy prices because of natural gas moving up higher, and Europe depends on it, and Russia's closing the taps. So if that happens, especially during the winter time, you're going to see natural gas prices move up, which is also going to affect the food industry as well. How so? Right? How so? The chemicals from natural gas, the components of it, goes into fertilizer. And fertilizer is used, again, for your crops to grow so that we could feed people, right, in farming. So if natural gas prices move up, fertilizers prices move up, it means food prices are going to move up again. So you got a third reason that fertilizer prices can move up due to natural gas prices moving up. And another one that I want to add on here is China and Russia are also large producer of fertilizer, large exporters of fertilizer, as well. So China and Russia are large exporters and producers of fertilizers, and we know there's already supply chain issues in both these countries, in China and Russia, because of the war that Russia-Ukraine, plus the sanctions that the West has. Third is also the China zero COVID policy that they have as well, and those zero COVID policies also creating disruption, which is feeding into, again, higher prices into the fertilizer, which will also affect the food prices as well. So you've basically got three main reasons, or I don't know, three or four, I lost count now, 3-4 main reasons of food inflation to continue because of some of these points. So again, meat consumption increasing, ethanol that is coming from grains going into crude oil, natural gas prices moving up higher, going into food prices, which is going to push, natural gas prices going into fertilizer, that is going to push the cost of fertilizer, that's going to push food prices. Plus China and Russia, who are a large producer of fertilizer and are going to definitely see the effects of fertilizer and food prices moving up because of that. Now, fourth one I want to take a look at is here potash. Now, potash also goes into fertilizer, and you could argue that Canada, as it is part of the West, and they could help, and they produce and have a lot of potash, why can't we just also rely on Canada as well? So sure, you can, but maybe not for the whole world. This question I may have to look more deeper into, but Canada, depending on potash for the fertilizer, has seen some changes. And in Canadian farming, the politics that has been around farming in the Canadian markets has been a lot about talking about organic fertilizer and less of using the original fertilizer out there. And there's a lot of protests and a lot of farmers that disagree with using less of the original fertilizer and going with organic, and because of the production. So if you have a government who is stopping and slowing down farmers to utilizing the other the regular fertilizers that they've been using this whole time and moving towards organic, it's going to slow production, which means that, again, it's going to exacerbate the problem of food inflation and food prices. If you slow down the farming and utilization of fertilizer to move towards more organic fertilizer, there will be pain, and there will be this, again, supply chain, a supply shortage, a supply issue because of the ability to produce the same amount that you were previously with organic fertilizer. So you just can't match the two together. Right? So you need to utilize the original fertilizer, especially now. I understand the whole idea of the green movement and moving towards the and making things more eco-friendly. But in a situation where we are right now, where there are supply chain disruptions, where you do see China being affecting the world globally and pushing inflation higher. China doesn't have high inflation the way the West does, the way Europe, the way Canada, the way the US has. China doesn't have it. We have it all here, but China doesn't have that high inflation. They've got low inflation there, right? So it's us that have the problem. And if we start talking about that we've got to move to organic fertilizer in this time where we have a supply chain issue, and we have also Russia and Ukraine basically fighting and exacerbating the pain with the fertilizer prices and the natural gas and the energy prices, which is feeding to higher food prices, and you're telling me you want to move into organic fertilizer, which is going to even increase food prices higher, now is not the time to do it. Because it's very scary to put yourself in that situation, especially where we are right now. So that's also adding more fuel, especially for Canada, where you could see higher food prices just because of the movement to organic fertilizer. And a very good example of this is Sri Lanka. Sri Lanka moved to fully organic fertilizer, and as soon as COVID and this war and the supply chain hit, now you see Sri Lanka country completely economically destroyed just because of some of the decisions that the government has made. The president and prime minister of Sri Lanka fled the country. They had a food crisis there. They couldn't get enough food in there. Farmers couldn't produce enough food because they were using organic fertilizer. Inflation increased. Food prices there increased. Gasoline prices increased. Energy prices increased. Things got more costly. And their debts increased in Sri Lanka, and they couldn't pay it off. And now they're asking for a bailout from the IMF, and the president and prime minister fled the country. So when you get a situation like that, and you see that as an example, you hope it doesn't happen to some of these Western countries, especially when they start to move towards a direction such as organic. And I'm not against it. I'm saying, be eco-friendly to the country and to the earth and the environment. I'm all about it. But when you're in a situation like this, and you have to choose between being eco-friendly or starve to death, you probably would want to think twice again about making those decisions. So, that puts basically a lot of countries, if they're moving towards that organic fertilizer method, it puts them in a very tough situation, because that could definitely shorten the supply and exacerbate food prices continuing to move up higher and higher and higher. So 4 reasons right there. Now, fifth one I want to talk about. Oh, sorry, before I go into the fifth one, I want to just add one more point about this organic fertilizer and talk about Sri Lanka. It's basically, if you look at their tea exports has been one of the largest exports that help Sri Lanka, especially in their country. That has dropped, especially with the organic fertilizer, that has dropped by 25%. And they do depend a lot on it. And that has dropped because of the utilization of the organic fertilizer, plus the tensions that escalated with this war, supply chain, and COVID, right? Now, if we were in a different situation without the war and supply chain, maybe it would have been fine. But in that time, a massive drop, which your country depends on for your GDP and your income, and 25% of it gets dropped. And that's a big, tea exports is a big business for Sri Lanka, and 25% of it drops. You could see that why their economy went into a big spiral down, and the president and prime minister basically fleed, and there's a big crisis that's happening there. Okay, so fifth reason, I want to talk about food nationalism. So food nationalism, this is basically an interesting concept. You know, we've seen parts of this, but one can speculate that down the road in the future, as demand for grains continue to be there, demand for potash still continues to be there, demand for fertilizer still continues to be there, more farming, more meat consumption means more grains, more ethanol into motor fuels means more grains, means food prices going to move up, may lead to food nationalism. Now, what does food nationalism mean? Right? So basically, what it means is countries thinking about banning certain exports because within their own country, they need those items. So take, for example, India banning wheat because of the drought. Now, weather is a completely other variable, which we are seeing also this year to the added tensions that we're already seeing with supply chain and everything out there. So weather has been quite disruptive, and there was massive droughts that were happening in India, which caused basically also some food shortages. It caused a lot of the crops and wheat to kind of be destroyed, and also was very hard for farmers to produce a lot of wheat, which caused India to make the move to ban exports of wheat because they need to keep it within their country. Now, India is a big producer and exporter of wheat. What if a lot more countries decide to do the same thing as well, where they start banning certain food resources, and they start banning, let's say, wheat and grains, which basically dries up the supply again, pushes the price higher, and makes food even more expensive. I mean, especially when you're screwing around with food and people, if they go into starvation, think what happens when people go into starvation. They will start killing and committing crime for food and just to survive. And it can go there. Now, I'm not saying this is a trend that's going to start, and beware, and I'm not trying to scare you and do kind of a doomsday video here. I'm just spitting out some possibilities, some trends that have been happening and we've been seeing, and the dangers of, and how scary it is that a lot of these countries, how they're interconnected, and many countries who may depend a lot on other countries for food and these resources, which could, spark up. If you see already a war between Russia and Ukraine, and you already see, before this, when Trump was as president, there was a big trade war. The question that may lead to with this food nationalism is there going to be a resource war, right? Could this lead to a resource war where people need resources, people need food, we need these grains, we need these commodities, and countries are banning it, and now we're in a very tough situation, and there's just a complete resource war between country to country, and food prices are getting higher, and it's getting more ugly. I'm not saying we're going there. I'm just saying that these are some possibilities that could happen if the key word is if things get worse off, right? And it's kind of scary. So, to sum up this video and to summarize, what I'm trying to tell you in this very long video is that food inflation seems like it's going to be here to stay. And if we relate this back to consumer price index, right? If we relate this back to the inflation metrics that we watch, especially the US CPI, can we see inflation, or has inflation peaked? A lot of talks. We've seen the S&P 500 rally about 18%. We've seen NASDAQ rally about 24% on the idea that probably, inflation has peaked. Things are getting better. Maybe the Fed might pivot. Has it? Is it really doing that? Have we really peaked? If these couple of things that I just mentioned here are going to stay for, couple more months, maybe a year or so, that's definitely going to feed into higher CPI report, higher inflation report, which is going to feed into, higher prices, and for central banks around the world, including the Fed, to continue to fight inflation with higher interest rates. Which means if they continue to dial up the interest rates higher and higher and higher, then that could be the trigger point for that severe recession, right? A lot of people are calling it, we're probably going to be in a mild recession. But maybe that could be the trigger point that as prices continue to move up higher, if food prices and inflation continue to move up higher, you're hearing a lot of Americans in America taking 2 or more full-time jobs by one person because it's just too costly. If that starts to trickle in and affect the markets completely, then you could probably see, a severe recession, and you see the stock market and the economy drop, more jobless, a lot of people to be jobless, and unemployment rate to skyrocket. That could lead towards that situation, and the market might be pricing it wrong if they see some sort of pivot or inflation to peak, especially if there's still a lot of risks down the road. There's still a lot of risk even now with the China and Taiwan and US. If China invades Taiwan, that's going to exacerbate even more problems down the road 100%. And inflation is not going to be solved very easily. Now, this inflation story is a problem with the supply chain. And the Fed is trying to, they can't do anything with the supply chain, but Fed and the central banks around the world are trying to control it on the demand side by increasing rates, creating pain so that demand falls, maybe consumption falls, pricing and a job market cools down, so things can cool down to bring inflation lower. The only question is, can the Fed do it? Can they engineer a soft landing? Or if they don't, and inflation continues to move up because of a lot of areas in the sectors, and if maybe, let's say, energy prices are somewhat coming down, but if food prices continue to move up, or certain area of prices continue to move up, and inflation still stays elevated at a very high level for a very long time, then yeah, they have to continue to battle the inflation with higher rates, because they have an inflation and a jobs mandate as well. They don't have a stock market mandate. There's no stock market mandate that the Fed has. So they want to tighten conditions to bring inflation down to that 2%. Which leads me to my last point about a recession. And I did a video on this, so you could take a look at it. But a recession leading to lower demand, which means that lower prices. If you look at CPI and you look at inflation, a lot of inflation, getting inflation down to 2% or even below zero, even to negative territory, has been a result from a recession, especially a severe one. Right? If you look back in 2000, you look back in 1980s, you look back in 2008 especially, got inflation way below 2% by having that recession. So question is, will it take a severe recession to bring all these prices down, to bring food prices down, to bring things more orderly, to bring fuel prices and all of these things down? Or will we see a recession where, sure, it brings inflation down overall, but certain areas, especially if there's still supply chain issues, certain areas of maybe commodity prices or wheat or grains or fuel prices, maybe they will stay elevated or continue to move up high in a severe recession. Or the second scenario is they all come down, inflation gets adjusted, gets to that 2% mandate target, and then everything fixes and we go on a reset to then fix the economy again, and then again we start to steadily rise higher and higher in prices again. So let me know what you guys think. It's been a long video. Leave a comment below and let me know what you guys think about all of this. And follow for more, subscribe for more, like this video, and let me know if you think we are going to get a severe recession. Let me know what you think about the food prices. Will we see higher food prices? What do you think about all this war between Russia, Ukraine, China, and US and Taiwan? Will this continue to exacerbate the pain and lead into higher prices? All right, I'll see you guys around. Good luck. Bye.